If you're trying to get a career in insurance adjusting, you might be asking, well, how much can I make? Well, that depends. And one of the biggest variables is where you work. Adjuster salaries can vary from state to state, and that's not random. And there's several key factors behind those differences. Understanding them can help you make the smarter decision in your career path. Today, we're breaking down the X factors that impact adjuster salary by state, so you can get a better understanding of what drives that earning potential in this industry and how to position yourself for higher pay. Factor 1, cost of living and local wage levels. One of the biggest influences on adjuster salary is cost of living. States with higher housing costs, higher wages, and larger metropolitan areas tend to pay adjusters more. For example, adjusters working in states like California, New York, or Washington often earn higher salaries than those in lower cost states, not necessarily because the job is easier or harder, but because wages must keep up with local expenses. Insurance companies set pay ranges based on labor markets, so where you live or where you're willing to work has a huge impact on how much income you can make. Factor 2, claim volume and disaster exposure. Another major driver in salary differences is how often claims occur. States with frequent natural disasters such as hurricanes, wildfires, hailstorms, or flooding tend to have much higher demand for adjusters. Think states like Florida, Texas, Louisiana, or California. In these areas, claims can spike dramatically during catastrophe season. These increased demands can often lead to higher pay, more overtime opportunities, and in some cases, premium rates for independent adjusters who are willing to travel or handle high claim loads. Factor 3, licensing requirements and reciprocity. Licensing rules vary by state, and that does play a strong role in earning potential. Some states have stricter licensing rules while others allow you to work across state lines. Adjusters with multiple licenses or multiple licenses in high demand areas have better opportunities and better paying assignments. Being licensed in the right state can significantly expand how much you're able to work and how much you're able to earn. Factor 4, experience level and specialization. Experience matters, and so does specialization. Specialized skills like advanced estimating, commercial property claims, catastrophe response can increase your value in any state. The more problems you're qualified to solve, the more leverage you have when it comes to your pay. Factor 5, employment type. How you work is just as important as where you work. Staff adjusters typically earn a steady salary with benefits. Independent adjusters may earn more during busy seasons, especially in high claim states, but income can fluctuate. Public adjusters often earn commission-based income, which can be higher per claim but less predictable. Each path offers different income potential depending on the state, market conditions, and the claim volume. Factor 6, local insurance market competition. Finally, competition within a state's insurance market impacts value. So states with high concentrations of insurance companies, third-party administrators, and adjusting firms tend to have more opportunities. And with more skilled insurance adjusters means more competition, and that also drives wages higher.
More employers usually means better negotiating power for adjusters with the right training and the right credentials.
So when it comes to an adjuster's salary by state, it's not just geography. It's cost of living, market demand, licensing, experience, employment type, and claim frequency. Understanding these factors can help you think strategically about where you want to get your license. So if you're serious and sure about wanting to become an insurance adjuster, planning and education can make all the difference. If you want to learn more about insurance adjusting, please visit AdjusterPro. You might be surprised at what you find. But in the meantime, subscribe, like, and I will see you in the next video.